You do not know the home security system that launched in 2006, SimpliSafe. You have not been listening to a podcast. You have not been watching YouTube. You have not been watching TV. I'm not sure what you've been doing. Don LeBlanc recently joined the company as the Chief Commercial Officer, which includes CMO duties. Previously spent a number of years in several roles at Vistaprint, including CMO. Don, welcome. Where are we getting you from?
Hey, Steve. I'm just outside of Boston.
Ah, cool. My old stomping grounds, Providence. Welcome. So SimpliSafe is in a more mature stage than many of the D2Cs. It's one of the reasons why I wanted to engage you in addition to the sheer success of the brand. You've achieved tremendous brand awareness. You have a stable subscription business of about 1 million subscribers. So my question to you is what does the next stage of maturity entail beyond just top line growth? As we see a company like yours move into that next stage, what are you thinking about in terms of where you pivot and what the next stage of growth is?
Yeah, thanks so much for having me, Steve. And it's great to be here. As you said, I just joined about 3 months ago. So I'm the guy that woke up on third base and very fortunate to be joining the team. It's not unlike Vistaprint when I joined there 10 years ago at that steep part of the growth curve, getting to more scalability, more structure, more process, and trying to capitalize on that kind of deep DTC heritage. So what I'm really trying to do is bring more structure to it and keep the growth story going. I'm going to show a graphic here, hopefully, if you can push that. It's a simple graphic.
Let's bring up our first graphic.
I'm going to set low expectations for the visuals here, but it's basically, as I think about it, there's always a heritage in DTC companies for being very performance oriented, focusing on how do we hit the numbers, today, this month, this quarter. But there should be more to that in the story. So it's not just what are the economics associated with acquiring customers, retaining customers, growing customers, but it's also how do we build brand over time and how do we institute more operational effectiveness. So here you go. So this is what I would call our balanced scorecard that we're working on now at SimpliSafe. First column, and just so folks know if you're not familiar, yes, we're a hardware company and we sell directly to consumers of our home security systems. But ultimately, we are a service company. We provide protection services, professional monitoring for our customers. So what we often talk about is not just selling systems, but delivering subscriber growths. Because ultimately, if you buy a system and you don't buy the kind of service that goes with it, you've just bought a very expensive noisemaker, which is sometimes okay, but not the best for home security. So for us, the 3 buckets are deliver subscriber growth, classic D2C. Secondly, improve our competitive position so that we can have growth in the years to come. And then lastly, how we do things, improving operational effectiveness. So some of these will look very familiar to all of you, I'm sure. Channel efficiency, how do we buy media more effectively? How do we have better creative? How do we think about promotional offers? So what is the kind of the recipe that continues to drive channel efficiency year over year? Ultimately, when you get them to the site, what are we doing to smooth that process and get them through the funnel and ultimately converting? And then for us, something that's unique is this notion of activation rates. Not just do they purchase the product, but do they purchase the plan that goes with it? Second bucket is how do we build brand? We've had great success. Our unaided awareness is up 100% year over year. So we're making tremendous progress on. Unfortunately, despite what Steve said, not everybody knows who we are yet, but we're working on that. And then what do we want to stand for as a brand? Our value proposition is just getting, hopefully lower prices and more product features out there. And then the end-to-end customer experience. And these are areas that, again, traditionally D2C companies, a lot of them don't focus as much on that because they're so focused on the first column early on. But we want to have a great customer experience end-to-end. And then lastly, the people, process, technology. How does it get done? How do we create scalable systems? As you think about this part of the growth, when you start moving from 1 million to 2 million to 4 million, if you don't have proper structure, the things really fall apart. So it's hiring the right people, getting the right processes, and then all the supporting MarTech infrastructure that goes with it. So a lot on our plate. What we try and do is lay these out, OKRs, and then every quarter go in and rate ourselves and how we're doing across all 3 buckets.
But part of this is also you're not thinking just in quarters. You're thinking much farther horizon, aren't you? And I'm curious, what does that mean when a D2C has to start moving towards thinking 3-4 years out, how that changes your sense of planning and where you're making investments?
Yeah, and this is, I think, again, quite common for a lot of D2C companies. They start on the left. They're so focused on, as a startup, and particularly we were a bootstrap startup, cash flow is king, and you focus on what am I going to do to kind of hit the numbers, pay the rent, and continue to grow, or pay back my venture capital friends, whatever it might be. You don't spend as much time on the right on things like technology, which have a long-term payback. So unless you're looking 3-4 years out, a lot of times you don't invest in those areas. Same thing with brand. It takes a long time to build brand, or you burn a lot of dollars to build brand. So as we think now in more of a 3 to 5 year horizon, it's easier to justify these investments. It was harder to do that in the earlier days of the company, where they were focused on get through the quarter and kind of make payroll and continue to grow.
Give us an example. What are some of the places where you're now making some longer term bets that you might not have, or that a shorter term D2C might not have?
Yeah, I'll give you an example in the technology space. For those that are familiar, we're still using a Drupal solution that is probably 7 or 8 years old, and it's not broken. It still processes, it works, but it really limits what we can do in things like personalization. Same thing with our email solution. So all of these things that if it wasn't broke, don't go in and fix it. We've now invested in and are in the process of rolling that out, e-commerce platform, email platform, and adding in a lot of analytics infrastructure that goes with it in terms of data lake and kind of analytics BI platform. So that whole area is a big investment for us that they were living without for many, many years.
And how about in media planning and brand mix? When you start thinking about that longer term horizon, how does that change the way you're allotting media and even the creative that you're using?
Yeah, so there's, for us, when we think about the creative mix, it definitely encompasses the first 2 columns here. We need it to perform. There's no question about that. We need people to have a call to action, come to the site and buy in order to pay it back. But we also need it to do lifting on the kind of brand awareness and perception side. So we need it to break through the clutter and deliver positive messages about who we are and how we compete with the people in our space. So we think about it in both areas. Something new just in the last, call it 18 months, has been more reach media buying. Traditionally, we've been very performance oriented in the way we bought media. And now we're buying more broadly across segments in terms of getting awareness out there. It doesn't look like it pays back as well in quarter, and it probably doesn't, but it contributes to these huge gains we're seeing in awareness that will play out over the next few years.
And is that sort of more a leap of faith that it is going to pay out, or do you have any KPIs against that broader reach?
I'd say it's a mix. So at the end of the day, it's a leap of faith because who knows what the world will look like. No one was predicting COVID this year. And so there's things like that we don't know what 2021, 22, 23 will look like. That being said, very well established that these are strong leading indicators. I can almost guarantee if unaided awareness continues to go up like it has been, it will translate into many more sales. Particularly some of our competitors have contracts with their customers. As those contracts come free, they come into the market. So people might be interested in buying from us today, but are limited by the fact that they're in a contract with a competitor. If 10 months from now, they come free of that, at that point, it will pay back for us.
What have been sort of the key challenges in making this pivot towards a longer term focus? What have been the key things that maybe you didn't expect to see, or that you would have liked to be doing better at this point in the pivot?
Yeah, I think on the kind of the business side, it's gone really well. And I can talk about how COVID is there to helping us, giving us some tailwind. I think the challenge is, as always, on the people side. It's trying to get everybody on board for what you're trying to accomplish. And to your point earlier, there's people that have very short-term metrics that are trying to hit their goals. And historically, they want to do whatever they can to hit the number today and next week. Now we're saying, no, there's actually more long-term goals, and there can be a tension between these buckets. So there's times when we're doing things for brand building that aren't paying out this quarter, and that can put pressure on that, and it puts pressure on those people who are sitting in those roles. Similarly, when we talk about new process, I think that's something that scares a bunch of people, particularly people that come from smaller companies, and SimpliSafe certainly was that for many years. They think process means slower, bureaucratic, it's going to be harder to get things done, and we're going to lose what made us special. So I think getting people on board that actually the right process enables speed and agility, and that's what we're trying to get to, is a challenge. People that have come from that background and have seen it work well are on board, and those that haven't seen that are a little dubious about adding process to something. They think it's just going to slow us down.
Could I poke at that a little bit and ask about process? Maybe give it an example of the ways in which you're transforming your process so that you're able to scale and make repeatable certain things?
Yeah, I'll give you two examples. So one is our creative brief process. So we have an internal agency, which has worked out great for us. We have a really strong team and all the benefits of them understanding our business so much better than an external agency would. They take in briefs from different parts of whether it's our e-commerce team, our channels team. We actually have a UK business as well. And historically, that's been very loosely managed in terms of the standardized processes, and it just creates inefficiencies in the system. So as if you are a kind of a copywriter or a designer, and you're seeing different briefs and different styles, it might have been quicker for that person to write it because it was the form that they felt comfortable with, but it's slowing us down further down the path. So that would be one. Another is forecasting. It's something you would say, hey, you know, sales cures all ills. Don't worry about it. Except when you start to run into inventory problems and you don't have product in the warehouse to ship out and you get unhappy customers. And so we've been really trying to beef up our forecasting approach because without that, we run the risk of really disappointing customers. And ultimately then word of mouth gets around and that's going to hurt us and our brand in the long run.
Since you mentioned customer, I wanted to bring up the issue of customer experience and how it's a term that almost all the D2Cs use, but I really like it when to nail down some of the companies to talk about what does a good customer experience look like for SimpliSafe? How is it a competitive advantage and how are you improving it?
Yeah, so for us, I think it's in two buckets. One is the actual product experience. So our founder, Chad, was a product guy. He designed the first SimpliSafe product over many years. And I think he had a strong passion for the actual product performing in someone's house, being the easiest, simplest product to use to protect your home. And we've had a strong heritage of having great product experience. Customer experience, less so. As you think about the experience from a channel, you know, from the end-to-end experience, from when you experience the brand, whether it's on TV and digital, to when you get to the site, what you see, to when you place your order, to when it shows up at your house, to when you unbox it. So that whole front part of the customer experience, I think, is underdeveloped for us. And we need to get better at it. And I think part of that is KPIs. So for example, you know, what % of orders are shipped out on time from the warehouse? What % arrive on time? Would be very operational metrics. You could argue it's blocking and tackling, but I can tell you when people don't get their product in a timely manner, it degrades their customer satisfaction and things like Net Promoter Score. So we're placing a big emphasis on the front part of the experience because we feel like we've already got a great product experience in the market.
I think in the beginning, SimpliSafe had this great set of endemic targets that it could aim at. And now you have to deal with, and this I think speaks to customer experience too, is you now have a set of other D2Cs that are in the space competing with you. And I think a lot of people in our audience are dealing with that same challenge, as many of them innovated in a space that then is being filled with competitors. How do you think about that more local D2C competition and how do you handle it?
Yeah, I mean, we're in an interesting spot, although I'm sure everybody has their own unique version of, we've got different value propositions all around us trying to provide home security. So some of them are very much sitting on the same spot as we are. So it's a kind of D2C, vertically integrated, design the product, ship it directly to the customer, and you go. We also compete with very large companies, a division of Amazon. There isn't anybody bigger than Amazon. So one of our key competitors has a strong advantage of being kind of owned by that. And as we think about Amazon as a distribution channel, challenging to think about how you leverage Amazon when you're competing with Amazon in that category. And then we compete with a bunch of non-digital, non-DTC companies that provide more local service, kind of the established, you know, ADT is the leader in our space and they have been for decades. And they provide much more of a hands-on professional install, non-DTC like experience. So part of what we're doing is trying to talk about why our DIY experience is better, all the benefits of e-commerce and set it up yourself. So in some ways it's a value proposition conversation as much as it is a brand conversation. So we feel like we've been in some ways the kind of the winner of our space per se of being the kind of best DTC DIY solution. But now we have to go out and compete with people who have a little different value proposition.
So we're going to back up a little bit and go back and drill into this original slide that we were sharing about the things that you're changing, and part of that is the core competency and value for a lot of D2Cs, which is that D2C engine, the thing that's driving people into the funnel. So let's talk a little bit about how that is evolving for you. What are the next stages in bringing that D2C engine to that next level that serves all of these longer term goals, but still is keeping that flow of customers?
Yeah, I mean, I think we're probably like most companies. There's a constant charge to grow faster and cut costs, if you will, on the marketing side. And for several years, SimpliSafe has been growing fast, but our kind of cost per acquisition has been growing as well. And I think that is our kind of meta challenge: is how do we reverse that? The great news is with kind of COVID, we've solved that problem, at least temporarily. Demand is up significantly in the market for our services, and we are very advantaged versus people that are professional install and professional salespeople who are kind of going into your house. So that has been a solution. We don't expect it'll continue forever, but it's sort of a short term. Separate than that, we're doing things on media buying, looking at things like 60s, 30s, 15s. How do we kind of mix that out differently? On the promotional side, we've played around with different things, whether it's % off sales. We actually have more kind of value add free item type offers as well, which incent the right behavior. And then creative, I think, is always the big lever for us, both in terms of DTC and building brand. So about a year ago, we launched a new campaign you may have seen, starring Robert Larson, who's our kind of brand icon. And we're trying to leverage him certainly in broadcast, not in all channels, to start to tell that story. And when brand icons are done well, they really cut through, and they allow you to have better breakthrough and attribution and build identity. It takes time, certainly. But those are the kind of things that collectively we hope are going to lead to much better channel efficiency.
Let's actually, we have some of the creative. Let's bring up the first two. We have a couple of static images. Just sort of talk us through the thinking behind these two, what you try to achieve with this sort of creative. And then we'll go into the video.
Yeah, and this is, I would say the result of, multiple years of A/B testing and trying different messages in different platforms. And we do a tremendous amount on digital and Facebook specifically. And what we found is really clear, simple messages is best in those. So, we'll show you a kind of, I think, a TV spot in a minute with Robert, who's a really interesting icon, but he takes a lot to explain. And what we need here is pretty instant recognition of what's the key message we're trying to get across, kind of bold visuals, simple messaging, strong call to action. Is about as simple as it can get. And you think about part of the equity of our name, if you think about the left and the right, SimpliSafe. We always want to talk about being really simple, just plug it in and go, and 24/7. And we want to talk about being safe and having the kind of the backup there in terms of why should you believe we're safe? We're not the company that's been around 100 years, but if you trust, whether it's Wirecutter, US News, or whatever our kind of endorsement might be, we've got a lot of people that say we actually are the best solution. So hitting them really quickly with either a simply or safe message tends to work really well for us.
And again, how does frequency play into this? I mean, when I talk to a lot of D2Cs, they have it down to a science. They know how many touches it takes before they even get somebody to move an inch down the funnel.
Yeah, exactly. Same, I would say, and definitely varies by platform. It's a little more complicated as you start to get into more of the video assets and frequency there and view throughs. So these actually work really well, and I think we've got that locked in. We are always testing new messages, obviously, in terms of particularly when we roll out new products and what go there. But these tend to be easier, I would say, in terms of a direct response, just be able to measure really quickly whether it's paying back, and if it is, we invest more.
How long is the consideration generally for this product? What's the length you're usually aiming at or thinking about?
Long, at least relative to what I'm used to. I'm used to more transactional businesses where once you get them in, you hope to convert them the same transaction or shortly thereafter. It's not uncommon for 3, 4, 5 months for someone to really think about the category, research it, talk to their friends and family, look at multiple sites, go to stores. So part of what we do as well is a lead generation process where we capture leads and then we try and nurture them over time. So when they're ready to buy, hopefully they come back to us.
Is it sequential messaging for these customers, or are you sort of hitting them with the same basic overall claims again?
Yeah, I'd say that's one of the areas we want to get better at, to be honest with you. There's more sophisticated work to be done in terms of data mining and using analytics to understand what messages resonate with them. The reality is, once you've got a group in-house, there are certain messages, for example, we don't require you to sign a contract. That is a really compelling message for some percentage of customers. It doesn't really matter to others. So the sooner we can identify who the people are that care about no contract versus care about, it actually our camera sees in the dark, then we can customize those messages. And I'd say we're still early at getting good at that.
Let's take a look at your iconic pitchman, Robert, and then you can then on the other side we'll talk about why this pitch and why this breaks through the clutter.
Sure.
Hey there, Robert Larson here. With SimpliSafe, you get comprehensive, professionally monitored home security without having to leave your house or have anyone to come install it. You simply order it online, it gets delivered to your door, and you can set it up yourself in just a few minutes. Imagine that. So take it from an expert. Get SimpliSafe and protect your home, your family, and anything else you need to keep a close eye on.
So why this creative choice, and how are you finding that this actually is cutting through that clutter?
So this was shot during COVID in the last 2 months. So we had to be really creative on the kind of the shoot part of it. Robert's a really interesting character. I mean, I think he's a kind of an ex-burglar who now is a family man and is helping others protect. Sometimes it's a little complicated to kind of explain that to folks. So that's part of our challenge is, well, who is this guy? And is he friend or foe, if you will? But once people get it, they really like him. I would say the kind of the key messages you can see we're trying to get across there around the simplicity and the comprehensiveness of the solution, as well as just really keeping you safe, which he's supposed to be a home security expert. So, I'd say the first time we started running Robert and we track things through Millward Brown and other areas, he didn't score as well. And the more we use him and the more we shape him over time, the better he gets.
So you actually, rather than an immediate home run, you actually get your audience used to this, and they sort of come to the character.
You really do. I mean, you have to wait and invest in it. And I wouldn't say we're committed to him for the next 5 years because we always want to be testing new creatives and campaigns, but we have to give him enough time to kind of grow and
Now, what does that take? Does that take multiple creatives? Do you need to sort of keep telling the Robert story in a lot of different ways, and that's where people have a lot of ways to get into him?
Yeah, so we're in the process of shooting the kind of our holiday campaigns. We've got 4 new spots kind of upcoming to be shot, and we're going to just try and tell more parts of the story. And it's always a balance of how much of the story do you tell versus how much of the product do you sell. But like all icons, they just get better with time if you treat them right.
And I have a final question, but before I do, I want to remind everybody that to raise your hand if you have a question for Don, please use your raise hand icon and we'll put you in queue and get you live to ask it. Obviously, cost of acquisition is one of the key challenges everybody has. What are some of the things that you're putting into place to manage that costs and to bring it down, or at least flatten the curve of it?
Yeah, I'd say, I mentioned a few things before around kind of media and creative. I think generally one of the things that's really interesting about us is we're pretty spread across a lot of different areas, whether it's broadcast or digital, but we're also really big. I think we're the number 4 podcast advertiser in the country. And we're certainly not number 4 much else in terms of the scope of the business. So we invest a lot in certain areas, and then you either question, are we over investing in there, or do we have the secret sauce? And it looks really good the way we measure it today, but we're going to be testing new marketing mix analysis to help determine that. Some of the areas like podcasting can be challenging, quite frankly, to measure the effectiveness of it. But it's really the kind of traditional continued at the analysis side of it. We've done it before, but we're going to go out and try it again in different ways and triangulate around where we think we might be better served and moving money around between all the different buckets that we have.
Are you using a lot of post surveys to find out where people are discovering you? Is that where are you getting the most valuable data about podcasting from surveys or from the podcasters themselves?
Well, the podcasters always say it's great, obviously. So they're a little biased, and there is some truth in that. They have some listeners who are very passionate. But yes, we do it, whether it's promo codes or survey, we have a variety of methods.
Well, let's see if we have any questions. Lisa, do you have any questions? Do we have any questions from the audience?
Yeah, actually, well, I first want to let you know, I've been watching the chat, and it looks like a thumbs up for the ad. We have a few people who have been commenting. Max Leader, he basically thought it was, loved the ad, and then a lot of people agreed. Actually, even Nick Fairbairn, he said that it got his attention even when he started on TV. So just wanted to give you a few kudos for that.
We don't mind if he buys a system too. That would be fine as well.
And actually, I think Jim Parsons has a question for you. You getting Jim there? No,
We are. Can you hear me now?
Yeah.
There.
Go ahead, Jim.
Great. So Don, just understanding a little bit about your background, have you always done your agencies in-house, and what have been some of the pros and cons that you found as you've tried that process?
Yeah, I mean, I've always had, I'd say primarily agencies in-house. Use some for broadcast, to be honest with you, in the past, because I think there is, the stakes are high when you go out and you do broadcast, and sometimes higher than the dollar amount. There's the visibility up to the CEO and board level can be really high on that. And there's some amazing talent out there. So it's a question of whether you can attract that talent in that has that capability. I've always found you could bring in, at least in the kind of the Boston area where I am, lots of great digital talent. It's not that hard to find great digital creatives in the area. So I'd rather bring them in and kind of build from there. And then, you know, they're on a spot basis, use agencies, but I've always felt that it's better to bring in where we can. And that's most of the areas, whether that's print or digital, it usually works well.
Was Robert in-house or agency?
Yeah, no, Wade. So in fairness, and this is why it's a little bit of a you know, sliding scale here. You know, Wade, who runs our internal agency, was running on the external side in the agency for 25 years. So, you know, we basically have the agency expertise that we've kind of brought in-house.
Don LeBlanc, thank you so much for sharing that today.
Great, my pleasure, Steve. Thanks so much.
All right, thanks everybody.